Hey there, it's Casey Dimon, TaxSaleAcademy.com, and welcome to our weekly question segment. This week's question comes to us from Nate. How do you judge buyer demand? I know you buy and sell a lot of vacant lots, but I'm afraid I can't get buyers for them. A great question, Nate, and it is a question that I get from time to time. So obviously, it is going to be a matter of supply and demand, just like everything else in life. But what I'll essentially do is I'll review the listings in the area to see what is actively on the market and to see what has recently sold in that area. And you can do this by going to Realtor.com or Zillow, for example. It's very simple, very fast, and easy to do. But hopefully, there'll be quite a bit of activity in the area that I'm investing in, with numerous properties having been recently sold, others going under contract, and others coming onto the market. And if I see that, that'll give me a very solid idea that there is some buyer demand in that area. So that would be step number one, especially if you are selling to a consumer or an end user. Now, if you're selling to an investor, or if you can't find comparable sold properties, or if you have concerns, what you can do is you can also drive up the demand for the property by driving down the price. So what I mean by that is if a property is worth $5,000, but you're selling it for $3,000, obviously the demand is going to be much greater for that property compared to others that are on the market. And this is what I'll often do when I sell to other investors. I buy cheap, I sell cheap, and I'll collect those profits and I'll move on to something else. There's nothing wrong with that. You don't have to get top dollar for every single transaction. But again, I'll increase demand by driving down the price. So in short, what you need to do is review the area, do some research, see what is actively on the market, see what's under contract, see what is sold. Look for trends, especially things like volume or price increases or decreases, and then determine if there is room for you to be able to buy and sell a property there and at what price. If it's questionable, then determine the price that you could potentially sell at in order to drive up the demand for your specific property while still making money, of course. Can you undercut everybody else to increase the demand for your specific property and still make money? That's the decision that you have to decide looking at the property based on the research you have performed though. But it's all about that research. Eventually, you'll be extremely comfortable judging your buyer demand as you gain knowledge and experience in that area. And this is something that I do, by the way, for every new area that I start investing in. So Nate, I hope this answered your question. If you have a follow-up question or anybody else watching this video has a question, feel free to leave it in the comments section below this video or any of our videos here on YouTube. And as always, for more information on tax sale investing, just head over to TaxSaleAcademy.com. You can grab this book right here, Tax Sale Playbook. I bought the book for you. Just cover the nominal shipping cost. Or if you're ready to get access to our most comprehensive and detailed step-by-step training system, again, TaxSaleAcademy.com, and become a member of the Academy. See you next time. Take care. Bye-bye.